What's up, everybody? This is Sunko, the Korean Bro, and today is 2024, April 8th. Hmm. Okay, let's see. Okay. Hmm. Almost half of Warren Buffett's $369 billion stock portfolio is invested only in one stock. Mm, it's Apple. The Oracle of Omaha took advantage of what looked like a no-brainer buying opportunity. There is no denying Warren Buffett's remarkable track record as a CEO of Berkshire Hathaway. He has done an amazing job compounding capital at high rates over multiple decades. This is why the average investor closely watches what the Oracle of Omaha owns. Berkshire's massive $369 billion portfolio has dozens of stocks, but Apple, which represents 41.4% of the overall portfolio, stands out as the single largest holding. The FANG stock has soared 542% since the start of 2016, which is around the time Buffett first started buying the business. Hmm. Before investors contemplate whether it's a good idea to scoop up shares today, it's important to understand the factors that first drew Buffett to Apple. Even in early 2016, Apple had one of the world's strongest brands, boosted by its lineup of incredibly popular hardware products. This gave the company pricing power. Consumers want to continue paying up for new devices. Buffett appreciates businesses that can consistently ask their customers to pay more without hurting demand. Another top Berkshire holding is Coca-Cola, which certainly fits this category. Apple is a financial powerhouse. In fiscal 2015, the business posted an operating margin of 30% and it generated $70 billion of free cash flow that year. This type of profitability continues today. Apple produced $100 billion of FCF in fiscal 2023. Management used its windfall to pay $15 billion in dividends and to repurchase $83 billion worth of outstanding stock. In addition to strong financial performance, valuation is another top factor that Buffett looks at. During the first 3 months of 2016, Apple shares traded at an average price earnings ratio of 10.6. Given some of the sky high valuations in the market today, this wasn't absolute still for such a dominant company. Buffett took full advantage of the buying opportunity. Now let's see, Nvidia. Nvidia stock has soared more than 200% over the past year on optimism about its dominance in the AI chip market. The company holds about 80% share. Hmm. And thanks to its increase in research and development spending, and its pledge to continue releasing more and more powerful chips, its leadership is likely to last. Just certainly, Nvidia announced the much anticipated news plans to release its new Blackwell architecture, which includes six technological innovations later this year. Among these innovations are the world's most powerful chip and second generation transformer engine that will help Blackwell support double the computing power of its predecessors. The Blackwell platform also allows users to run generative AI as much as 25 times lower cost and energy consumption compared to the previous platform. Nvidia's chip dominance has helped its earnings to soar over the past few years. In the most recent quarter, revenue and net income rose in the triple digits. Considering this track record and the strength I mentioned above, the stock seems reasonably priced at 34 times for earnings estimate today. Amazon stock has advanced about 87% over the past year as the company emerges from a difficult period and shows it has what it takes to win over the long term. E-commerce and cloud computing giants struggled with higher inflation back in 2022, but quickly turned things around by revamping its cost structure, a move that should help Amazon accelerate any environment. Last year, Amazon's revenue climbed into double digits and it returned to profitability after a loss in 2022, the company's first net loss in almost a decade. Moving forward, Amazon should benefit from its dominance in the high growth business of e commerce and cloud computing, as well as its presence in AI. Amazon is using AI to improve its operations, leading to cost savings, and the company is selling AI products and services to clients through its Amazon Web Services business. Both of these efforts should result in earnings growth in the near and long term. That's why Amazon doesn't look expensive today, trading at 42 times forward earnings estimate. It's a stock I'd buy with no hesitation. As always, Shopify. Okay, Shopify provides business with a turnkey solution for omni-channel commerce. This platform unifies physical and digital storefronts, letting merchants manage orders and inventory from a single interface. The software integrates with marketplaces, social media, and customer websites, mobile applications. Shopify also provides auxiliary financial services like payment processing and financing, as well as solutions for marketing, logistics, and wholesale. Merchants find that value proposition compelling, so much so that Shopify accounts for more than 10% of online retail sales in the United States. That makes it the second largest domestic e-commerce company behind Amazon. In addition, Shopify leads the market in e-commerce and omnichannel commerce software, meaning the company is well positioned to benefit as more retail and wholesale take place through digital channels. Shopify reported strong financial results in the fourth quarter, beating estimate on the top line bottom lines. Total revenue increased 24 to $2.1 billion because of strong growth in the subscription merchant services segments. Meanwhile, non-GAAP net income more than quadrupled to reach $441 million due to cost control efforts, including headcount reductions and uh, divested of its capital-intensive logistics business. Management also discussed strong momentum in wholesale e-commerce, relatively new focus for Shopify. Wholesale e-commerce is also referred to as business to business or B2B commerce, and Shopify saw gross merchandise volume in that category increase 150% in the fourth quarter. That is noteworthy because the wholesale e-commerce market is about 3 times bigger and growing faster than the retail e-commerce market. Retail e-commerce sales are expected to grow at 11% annually through 2030, and wholesale e-commerce sales are forecasted to increase at 18% annually during the same period. Tonight I'm gonna have to put an end to YouTube right now, but I'll be back in a few hours because there's something important that I have to do. So I'll be back a while later. Okay. See you and have a good night. I'll be back anyway.